Hello, my name is Daniel Alvarez, and I am a senior public sector management specialist at the World Bank. Let me welcome you to this model, which focuses on how to complete the 15 tables in the permission questionnaire and how they are integrated. It is worthwhile noting that during the design of the TADAT framework, quantitative measures were preferred over qualitative measures. It is ambitious that in the long run, this approach will also provide a better basis for comparative analysis across administrations. You recall that in Model 2, we discussed the planning and preparation phase of a TADAT assessment, during which period a permission questionnaire is sent to the tax administration at least 3 weeks before the in-country phase. The assessment team leader sends the permission questionnaire to the country counterpart. The permission questionnaire is used to gather data and other information critical to the TADAT assessment. Therefore, the tables in the permission questionnaire are your first reference point for the 15 dimensions that are assessed using quantitative measures against set benchmarks. These dimensions are contained in 8 indicators found in POAs 3, 4, 5, 7, and 8. So let's start by looking at those indicators and dimensions that are assessed using quantitative measures. The first indicator is P39. It has a dimension that measures the time taken to respond to requests for information and advice. The second indicator, P412, has 5 dimensions that include the following: on-time filing rate of corporate income tax declarations, on-time filing of personal income tax declarations, on-time filing of value-added tax declarations, on-time filing of domestic excise tax declarations, and on-time filing of pay-as-you-earn or pay-as-you-go withholding declarations. The third indicator is P414, which has dimension which looks at the extent to which tax declarations are filed electronically. The fourth indicator, P515, has a dimension that evaluates the extent to which core taxes are paid electronically. The fifth indicator, P517, has 2 dimensions that examine the number of value-added tax payments made by the statutory due date and the value of value-added tax payments made by the statutory due date. The sixth indicator is P518. This one has 3 dimensions as follows: the value of the total core tax arrears at fiscal year end as a percentage of total core tax revenue collections for the fiscal year, the value of collectible core tax arrears at fiscal year end as a percentage of total core tax revenue collections for the fiscal year, and the value of core tax arrears more than 12 months old as a percentage of the value of all core tax arrears. The seventh indicator, P724, has 1 dimension: on time taken to complete administrative reviews. And finally, the 8th indicator, P828, has 1 dimension that measures the time taken to pay or offset value-added tax refunds. Now that we have identified which indicators and dimensions are scored based on the data in the permission questionnaire, let's discuss how the ratios used to score the dimensions are calculated. The calculations will then help us better understand the relationship between the tables. Table 1 gathers revenue forecast, collection data, and gross domestic product for the 3 most recent fiscal years, for example, 2017, 2018, and 2019. Let us look at the forecast and collections. The national budget tax revenue forecast for the respective 3 years is collected. This forecast is typically set by the Ministry of Finance or its equivalent with input from the tax administration. For purposes of TADAT, It should only cover the taxes listed in the table. The final budget forecast, as adjusted through any mid-year review process, should be used. The other information is on collections of domestic tax revenue. This is revenue collected by the tax administration at the national level, plus VAT and excise tax collected on imports by the customs and or other agencies. Social Security contributions are included in cases where they are a significant source of government revenue and are collected by the tax administration, as is the case in many European countries. Other domestic taxes collected at the national level by the tax administration include, for example, property taxes, financial transaction taxes, environmental taxes, and solidarity taxes. As a note, a solidarity tax is an additional levy imposed on personal or corporate income for the purpose of funding extra costs arising out of socially unifying activities or projects such as health, pandemic, or infrastructure. The tax can be applied to individuals and or business enterprises. Table 2 looks at the movements in the taxpayer register for the taxes described in Table 1. The taxpayers database includes all those natural and legal persons who are eligible to be registered for tax purposes. The database will also include taxpayers who are currently not required by law or regulation to file declarations and are explicitly flagged as such in the automated tax administration system. The difference between all those registered in the database and those not eligible for law or regulation to file declarations will give you the number of taxpayers expected to file their declarations. The number of taxpayers expected to file their declarations become the denominator used in calculating the share of taxpayers that file their corporate income tax, personal income tax, value-added tax, domestic excise taxes, and pay-as-you-earn or pay-as-you-go withholding. It is important to note that Table 2 impacts Table 4 to 10. That is, in Tables 4 to 10, the total number of taxpayers expected to file is derived from Table 2. This relationship linkage between the gathered data is something that the TADAT Secretariat looks out for keenly when conducting quality assurance for the assessment result. Table 3 on waiting time for telephone inquiry calls through dedicated call centers or interactive computer response systems is used as a proxy for measuring a tax administration's performance on time taken to respond to information and advice requests generally. During the design of the TADAT framework, it was found that many tax administrations were using different methods of recording or not recording inquiries from taxpayers or their agents. Moreover, many of the registers used to record inquiries were often fragmented across the tax administration. For example, the registration, the audit, and the collection enforcement units would all have their own registers. Consolidating all this information from a whole of tax administration or corporate perspective was, and in some tax administrations still is, a daunting task. Additionally, more modernized tax administrations were leveraging the use of call centers and interactive computer voice response technologies to respond to and record taxpayers' inquiries, as well as the amount of time it took to answer their calls and serve the inquiring taxpayer. The telephone inquiry approach, and for the purposes of TADAT, this includes the interactive computer voice response systems, was found to be an appropriate proxy for the time it takes for the tax administration to pick up calls from taxpayers. The total number of telephone or interactive computer voice response calls received include all calls received, even if those that get dropped within the 6-minute TADAT benchmark. The number of calls answered within 6 minutes waiting time becomes the numerator. The data in tables 4 to 10 is used to compute ratios of taxpayers that file their declarations on time. The number of declarations, also known as returns, filed on time is those filed by the statutory due date. This number includes declarations filed after the statutory due date, provided permission was granted for the extension by the tax administration. The tax administration should keep a tab on the number of filings that are done after the statutory due date for which permission has been granted. The administration should also guard against any abuses for this facility so as not to compromise the timely receipts of declarations and revenues. Here are a few definitions that provide some clarity on what is being examined. Expected declarations are the number of tax declarations for each core tax in tables 4 to 10 that are required to be filed in the given reporting period by those taxpayers required to file returns by law. In calculating expected declarations for each core tax, you get the number of taxpayers expected to file, contained in Table 2, multiplied by the number returns that our taxpayer is required to file in the most recently completed year. This becomes the denominator. The actual number of tax returns filed by the due date divided by the number of expected declarations multiplied by 100 becomes the ratio for computing the score. See tables 4 to 10 on pages 142 to 147 of the TADAT field guide. The data in table 11 is used to compute the extent to which tax declarations are filed electronically, that is measured in P414, and the extent to which core taxes are paid using electronic payment methods as evaluated in P515. The ratios are compiled from the tax administration systems and inserted into table 11 shown on page 148 of the field guide. Table 12 uses value-added tax or equivalent as a proxy to compute the percentage of the number and value of payments that are paid on or before the statutory due date, including any days of grace applied by the tax administration as a matter of administrative policy. The on-time payment rate will be payments made by the due date as a proportion for the payments due. For TADAT purposes, payments due include all payments due, whether self-assessed or administratively assessed, including as a result of an audit. The indicator P517, timeliness of payments, is computed in Table 12 that is found on page 149 of the field guide. The data in Table 13 is used to compute the stock and flow of tax arrears. The objective is to measure the extent to which tax administration is managing the tax debt effectively. 3 dimensions are measured as follows: the year-end stock of total core tax arrears or debt as a ratio of total core tax revenue, collectible tax arrears or debt as a ratio of core tax revenue, and the fiscal year-end stock of arrears or debt that is more than 12 months old as a percentage of total tax arrears. The data in Table 14 is used to measure how effective the tax administration is in managing tax disputes at the administrative level, and not at the judicial or quasi-judicial levels. In computing these numbers of cases resolved in 30 days, 60 days, and 90 days, you add the number finalized during the fiscal year in columns E, G, and I, respectively. The totals found in columns E, G, and I provide a numerator in the 3 timelines of 30, 60, and 90 days, respectively. To calculate the denominator, or the total number of cases resolved during the year, we add the stock of cases at the beginning of the fiscal year in column A to the number of dispute cases received during the fiscal year B. The ratio of the numerators in columns E, G, and I to the denominator multiplied by 100% gives the ratio cases completed in 30, 60, and 90 days respectively. The data in Table 15 is used to measure the time taken to pay or offset value-added tax refunds or the value-added tax refunds offset against other tax liabilities. It looks at both the number and value of cases submitted by taxpayers. The data gathered must include instances where a formal decision has been taken to decline or refuse the taxpayer's claim for a refund. For example, where the legal requirements for refund have not been met. Further, data must be gathered on all cases where refund processing is incomplete. That is, where a formal decision has not been taken to decline the refund claim, or the refund has been approved but not paid or offset against other tax liabilities. Now that you've learned about the Pre-Mission Questionnaire and the international good practices in tax administration, you are ready to proceed to the next modules where you will learn how to prepare a performance assessment report and conduct an exit meeting. Good luck.